Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TRADINGVIEW. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. Okay, so it's definitely time for an update on the situation that we currently have on CHF JPY. Now, we did speak about CHF JPY quite a few times in the past, so it's definitely time to make an update to see what kind of opportunity we can currently be looking for on this pair, and obviously update the full market structure that the market has currently been created to show you what we can currently be looking for on the pair. Now, what we will be doing is, as usual, first approaching the market from a technical perspective. We will then go and see what we have from an order flow perspective to see what hedge funds are currently doing on these two currencies, so both on the CHF and on the JPY. And obviously, by using the combination of these two different types of analysis, so technical and order flow, we will be able to understand exactly what is the situation and how we can be looking to trade alongside with the institutions on the directional aspect of this pair. Okay, so let's get straight into the analysis. And as usual, let's start from the monthly time frame. Now, from a monthly perspective, what we can see now on the monthly, we can see that currently the market is testing a previous level of monthly resistance, which is now turned monthly support. As you know, a structure level in the market after it is broken it is switched from resistance to support. So we have previous monthly resistance, which is now turned support, which the market is testing and from which we do expect a rejection to the upside, possibly for the creation of a higher high to complete this impulse correction and impulse pattern to the upside. What we can also see in this type of situations, so in a situation after which you have an impulse, is that if you want to measure the correction, what you actually have to do is take your Fibonacci from the low to the high of the impulse. And what we can see is that the market retraced exactly to the 50% of the Fibonacci taken on the impulse, after which the market started the rejection to the upside, which we are also seeing in this current month. So recapping what we have just said from a monthly perspective is that we have a market that has created an impulse that broke above the previous monthly resistance, which is now turned support, and the market already retraced to retest the previous resistance, turn support, testing as well the 50% of the Fibonacci taken on the monthly impulse. So up to now, everything is quite clear. Going down on the weekly time frame, what kind of situation do we currently have? Now, from a weekly perspective, we can see that the market has created a nice M formation. Now, in general, after an M formation, what do you want to see? After an M formation, you want to see the market complete the pattern with a movement to the neckline. So you want to see a move to the upside to test the neckline of the M formation, which is the previous support, now to resistance, before creating the continuation to the downside. This is a general completion pattern of an M formation. If you have an M formation, you first want to see the market complete the pattern at the previous support, which is now to resistance, before starting the continuation to the downside. And that is exactly what the market did. The market completed the pattern at the previous support, which is now to resistance, before starting this continuation to the downside with the rejection that we are currently seeing. What we can also see is that currently the market has just created this M formation, after which as well we expected a completion to the neckline, which is again exactly what the market is doing. So on the weekly, situation is extremely clear. We have two structure levels which were and are the two necklines of the M formations that the market completed and created that currently are here, and the market is just testing and completing the second one after having tested the first one. So situation on the weekly is extremely clear. Going down on the daily, what do we see? Now, from a daily perspective, we can first of all see that we have spoken about CHF JPY quite a few times in the past. In fact, we had spoken about CHF JPY when the market was here, and I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the upside, and that is exactly what the market did. Then I spoke about CHF JPY after the market had created this W formation. I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside and complete the pattern at the previous resistance, which is now our support. And again, that is exactly what the market did. And then I spoke about CHF JPY after this overextended M formation, and I explained all the reasons for which from here we wanted to see the market create the move to the upside. And again, that is exactly what the market did. Just a quick reminder, make sure you comment below and you let me know which pair you would like me to cover for a trading opportunity in next video. But at the moment, what is the situation and how we can be looking to capitalize on the next move of CHF JPY? Now, at the moment, the situation from a daily perspective is of a nice impulse to the downside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the high to the low of the impulse. And if we do this, we can see that the market has currently retraced exactly to the 50% of the Fibonacci taken on this daily impulse, from which, generally speaking, we expect the continuation to the downside for the creation of a lower low. However, in this specific case, as we have already identified from a monthly perspective, we are at a monthly support area. Therefore, looking for a continuation to the downside on the daily is possible because a deeper test of this support is always possible. However, is very risky because we would be shorting a monthly support area, which is never a good idea. So on the daily, we can see that we have some confusion between what we see from a daily perspective and what we see from a monthly and weekly perspective. So how we will be approaching this kind of situation with students. Now, before I show you that, let's first go and give a quick check at what we have from a CHF and a JPY perspective if we look up the COT data, which is the commitment of traders, so what hedge funds are currently doing in the market. Now, from a CHF perspective, what we can see with the last report is that hedge funds have opened 500 longs and closed almost 600 shorts. So hedge funds are shifting their positioning to the positive side of the CHF. In fact, net positions, we can clearly see that they are increasing from the 12K that we had here all the way up to 15K, as we can read with the new report. Longs have been increased, and I'm definitely looking forward to see what we will see with the new report that will come out tomorrow. Tomorrow we have a new report coming out. If we will see more longs getting added on the CHF and more shorts getting closed, continuation to the upside and the break of the structure resistance is definitely possible. If we go and see what we have from a JPY perspective, we can see that with the last reports, hedge funds have been closing massive short positions. We see 4.1K shorts getting closed, bringing the shorts at 28K from the 32K that we had here, and longs were decreased in the long term because we see that we were sitting here at 59K long positions, and we went all the way down to 46K long positions. So definitely, if we will see some interest in the shorting side, which at the moment we are still not seeing, we could definitely continue with the move to the upside. So it would be great with the new report that will come out tomorrow to see that hedge funds during this move to the upside on CHF JPY have added some shorts on the JPY so that the weakness of the JPY can continue and CHF JPY can continue the move to the upside. Why am I saying this? I'm saying this because the best probabilities in the market always come when all time frames are in confluence. And in this case, as we have already seen, the monthly time frame is bullish. Therefore, we need a bullish weekly and daily time frame if we are to find the best probabilities. And the easiest way to do this, the easiest way that the market has to create the situation like that is for the market to actually break above this resistance, because currently this area is previous resistance, which is now turn support, again support here, and is now very strong resistance. So currently from a daily perspective, we have a market that is testing previous daily support, which is now turn resistance, and from here the market absolutely should create a continuation to the downside. However, with students, we will be looking for the move to the downside? No, we will not be looking for the move to the downside, not because it is not possible, it is definitely possible, but because we don't have the best probabilities as all time frames are not in alignment. Therefore, there are definitely better pairs to be followed with a better risk to reward and better probabilities. So what we will be waiting for on CHF JPY is for the market to break above this structure. When the market will break above the structure, at that point we will have all this previous resistance, which will be turned support here. So, as usual, being reactive and not predictive, if and only if the market will create a break above this structure, at that point, after the break on the retest of the level, this is exactly the zone that we will be monitoring with students from a 4-hour perspective, and we will be waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries with students, we will be taking a nice long with a good risk to reward and good probabilities for the move to the upside and completion of this impulse, correction, and impulse pattern to the upside. But at the moment, until the market will remain below this resistance, the market can and should create a rejection to the downside. So at the moment, we're not interested in this pair as there are better pairs to be followed. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education on all my platforms. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering all your questions personally every single day. So I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.